Hello, my friends. Hello. We're here so we can show all the different markets and where they're going. How are you? Good morning. Hello, Paul, Arena, Macro, and Ren, and Kevin. All my trading warrior brothers and sisters. Everyone doing okay? Dollar's strong today. We're going to finally get that close. Hello, Alan Shoe Smith, Forex Scale. Amira, shalom to you. So here we are, right here in the Dixie. A tip of the hat to Blake yesterday. He said he didn't believe the euro was going to, he wasn't bullish. Okay. And you look at the euro here, and we're pressing the lows. Looks pretty negative. Mustafa, how are you? And as I put forward yesterday, more cable weakness than euro, cable breaking the new lows. This is where I think cable's going to. Hi, Hugo. Right here, this major breakout line between 36 and 530 looks to me to be the target for this. And, it's being expressed in euro pound. Look where euro pound failed from today. Maybe it was this. Right. Okay. So here's a 4 hour. Failed from this moving average up here at 86.40, low 84.40. We penetrate this. 87.40 is very possible. Steve Surrey, how are you? Sinatra, I'm doing fine. How's everyone else doing? Let me ask you guys this. Are are you doing as well as this? Let me move you around. Active pattern in plays up like BE for Andre. Leandro is doing pips now, pattern in plays. Nice Aussie Kiwi long there. Nice Euro Yen short there. Blaker's short Kiwi up almost 2%. Greg is in US dollar Swiss. There's another nice one by Blaker in USD CAD. Stelios is up on Euro Yen, almost 1%. So when you woke up this morning, did your account look like this? Look at all the green. And when you come to face, you don't get our pattern in place. Okay, so here's my question. What's holding you back from being able to have access to great traders and good ideas and excellent research? And I can't think of a reason why you wouldn't give it a shot. Okay, so you're watching Euro. You're with us forever. Okay, forever is a long time. You just come for the conversations. Okay, Sonny. So you know what they say, talk is cheap. Uh, Talked about yesterday that the yen had a possibility of rolling over maybe to 108, and it's under pressure as well. Canada, what a star. I don't know if you noticed it. We did talk about this down here. Okay. It was Thursday or Friday, the throw over and then back in it. All right. After being wrong from up here, recommitted here. Very nice trade. We're talking about 370, about 230 pips. Anyone catch along Canada with us, with Blake? Talked about it a lot. Pretty nice move. We haven't even broken out yet. breakout's going to be up here at the wedge around 26.5. Congratulations. You caught it, Alexandria? Good. Are you in our community? So here's a picture of it. You know, once we break out, I think 130 is very, very doable. Crude's getting killed. All it did was rally back to 62 yesterday. I mean, it was a perfect flag, wasn't it? How do you get into it? Well, I would start by subscribing and getting familiar, Sonny, and pick out, maybe you're interested in gold, maybe you're interested in the oil market or the currency markets, and you pick out a few instruments, and at the beginning just follow a couple and start charting them and join the community. So this was the rally in right, this was 38% back in crude. Okay, so could it hold here and give us one more lift to 64? It's possible, but you had a $10 break, right? And about a $3.80 rally. Okay, so enough for a correction. If we get up to uh, 64, that would be about 61.8. That's if this low holds and we get some type of A, B, C. But crude looking, yes, the guitar is one of my instruments. I don't trade it though, I play it. S&P's under some pressure. I don't know if we're going to have to, if we're going to do this, and this, or this was enough and this is just a little pullback before we head up to new all-time highs. But I'm going to wait for new all-time highs for, I think, a major shorting opportunity sometime in April. Okay, you notice I haven't been talking about this, but if you caught the USD CAD or any of these trades we've been talking about, peel off a few pips and join us. Oh yeah, you guys asked about the Met. Yeah, gold is struggling. So something else I pointed out yesterday was the gold silver ratio, and I said gold's your preferred long if you're bullish metals, and silver will underperform, and that's exactly what's happening. So maybe this breakout's going to be delayed, but I still think we're going to get a breakout, and for 2 days in a row, um, gold is stronger than silver, as you can see. Look how much deeper the break has been between the two. So that's why, that's why I follow the gold silver ratio. You could trade it as a CFD, but it gives me my preferred longs and shorts depending upon the direction of the ratio. So silver is still the weakness between gold and silver. Oh, that's a nice, we're getting a kind of a testimonial here. Interview with Harold Malgrim. Thank you very much, Alexander. Okay, what a nice testimonial. Did you read that, Blake? And you know what? You were talking about YouTube yesterday, Blake, and that's where Alexander found us on a video, YouTube video.
No, you know what? I didn't, but thank you, Alex. That's really nice. Uh, he, I think uh he's a light member, so he actually listens into the webinars that are exclusive to the Forex analytics community. So he makes some comments during like the daily roundup and during the uh, morning edge, which happens in about an hour. And it's nice to have him here. And I want to say it's nice. You know, you don't have to be a premium member in our chat room. I mean, look, we all have different abilities as far as what we can commit
Yeah.
to trading, and you know, whether it's financial, whether it is you know, time, uh, and so for everybody, you know, we try to give you an option. You know, for those of you that are more immersed in the trading and you can do it every day, you know, yeah, we try to, you know, give you the chat room so you can be in chat. I mean, this is, you know, for those of you that don't know, this is what our chat room looks like. Oops, sorry, I need to, something going on over there. You can see like this is all the chatting that we've been doing since I've been awake, which has only been an hour and so you can see just, you know, all the chatting that's, oh, actually this is when I got here, somewhere around here. No, actually before that, somewhere around here. So you can see all the chatting and charts and, you know, talking about this and that and the other thing. I actually spent most of my morning just kind of uh, pulling some profits off the table. So it was a really good overnight session for me. And if you guys aren't following along, and by the way, I hope some of you read the chart of the day yesterday. Do you ever you know, try to zoom in on those there, Dale?
Zoom in on what, Blake?
I'm sorry, the charts of the day. So
Yeah, I look at them every day
yeah,
before I tweet them. I want to
yeah,
make sure it deserves a retweet, Blake.
thank you. I appreciate that. The Euro New Zealand actually just took off. I'm long the Euro Aussie, and I was trying to buy a dip in the Euro New Zealand. So unfortunately, I didn't get it because I stuck in a bid, and then I went about my evening. But it took off. I mean, I'm short the Kiwi dollar, so in the Kiwi I'm up like 100 and some odd 15 pips or something right now. 130, sorry. And then but the Euro New Zealand just started ripping, and you can see it's just taking off. But a lot of this is really kind of a catalyst of some risk off activity that's happening. Whoops, I didn't want to do that. You know, risk off activity that's happening, and we're seeing like oh, actually, I was just going to say we're seeing some Bitcoin coming down, but Bitcoin came right to really key support and bounced. But we are trading around the 55,000 level, and I think we need to be really careful with Bitcoin here because you can see this. You guys have probably heard me say this over and over and over again, especially those of you that are, you know, listen to the Morning Edge. Here's the bias chart from yesterday. We talk about 55,000, about it being really important, but also 52,500 has been major support for Bitcoin. And, you know, overnight we went as low as what, 53 or somewhere really close, right? 52,933. So we're coming really close to key support. And I believe that if we break through like this 52,500, it's going to really start to weigh on risk appetite because, you know, as I've been talking about, I don't know how extensively, you know, it's interesting, Dale, because when you do several webinars throughout the course of the day, because I do this one, then we do the Morning Edge here in an hour for just Forex Analytics subscribers, and then the daily roundup just for Forex Analytics subscribers. I end up doing 3 webinars a day, and it's like, did I talk about Bitcoin during this one, or did I talk, you know what I mean? But one of the things I know I've been talking about through all the webinars is, and even on the week ahead videos, is that Bitcoin is the riskiest asset in our markets right now, or cryptocurrency. And I need to make sure that I'm clear here. It's not, I'm not saying that you're gonna invest your money into Bitcoin and you're gonna invest your money into Bitcoin and then you're going to lose everything, that type of risky. What I mean by risky is if you want to take the most risk in the most aggressive investment in the markets, Bitcoin or cryptocurrency is where it's at. So when you see those types of investment vehicles like Bitcoin start to come down, that's more of a reflection of the appetite that investors are willing to take in risk globally, in my opinion. So, not again, I just want to reiterate, when I'm talking about Bitcoin, I'm not saying Bitcoin's going to zero because it's the riskiest investment in the world. Although I think that there's a higher probability of that happening to a cryptocurrency than it is to gold, let's say. But I am saying that Bitcoin is representative and represents risk taking attitude in the markets right now, and so does all other cryptocurrencies. So that's why when it falls, I start looking at, oh shoot, that means the S&P may come down, or we might see NASDAQ come under pressure again, or the dollar might start to rally. So that's the type of thing that I'm looking at in the markets, right? Sorry, I'm trying to get over to. How come I can't get I'm trying to get my chat box, but I can't see it. So I don't. Oh, there it is. Okay. So anyway, keep your eye on Bitcoin, and like I said, I'm gonna be really careful with a move below 52.5. That's when I start to get real jittery about risk assets. Okay. A couple other things I want to point out to you guys. The dollar Canadian, this is a very important chart. I'm long, and you can see this like inverted head and shoulder pattern, descending wedge, and you can see we're right up against what I consider resistance. This is 126, and I'm actually going to take this. I'm going to move it like this. Okay. We went as high as 125.94 today. Resistance, the 618 retracement is 126. This is an actionable idea for you guys. Okay. This is an actionable idea for you guys for the next week. Okay. I think we got to keep an eye on the dollar Canadian, because I think crude oil is starting to weaken. Crude oil is, showing that, we could trade below last week's lows, and we could see a little bit of risk aversion in the markets. Therefore, the dollar Canadian is going to be one of those currencies that will be bid as a result. I am expecting a move towards 129.50 to 130. Okay, we've been in a pretty severe downtrend since the COVID lockdown, right? We go into lockdown, we peak in the dollar Canadian at 146, and we've gone from 146 to 124. That's a lot of pips. That's 2,200 pips. Okay. I am expecting a recovery now towards 130. Do I think the dollar Canadian is going to be a good short again? Yeah, I think it will. I think anywhere between like 129 to probably 133, 135, it's going to be a great short. I just don't know, how far we're going to go. And that's more dependent on what happens with, equities, and
maybe it goes to the top of your wedge line where you have it anchored. Wedges can retrace 100%, so you have it anchored around 134.
Yeah,
top of the wedge.
That wouldn't surprise me. I mean, if things really get out of control here, let's take this high to low.
I think that'd be about 38% of the decline you just described.
Yeah, so let's figure out where that is. 38% retracement is 132.52. So I don't think that's like uncalled for coming out of a wedge. And again, it really depends on what happens with equities. And crude. There's obviously other assets that we'll be watching if things start to turn higher. But what I want you guys to really pay attention to is 126, because that's really something that could take place like here within the next day or two. Okay, so just keep an eye on the dollar Canadian. Also, one last thing, and then I'll see if Stelios probably has some comments with the overnight price action. If you guys aren't watching the cable, you need to be. I have reiterated 137.50 as being really critical support over and over and over again on the Morning Edge webinar, which again is for the Forex Analytics clients here in the next 55 minutes. This is major support. You see a big daily trend line that comes in just slightly below that, but this is a big breakout point. We break through this 137.50, we might come back and retest, down here in the 130s. I'm overall very bullish the sterling because of the longer term outlook and technicals, but that doesn't mean that we can't, trade from 137.50 to 133 over the course of the next month or two, and give us all an opportunity to be buyers at better prices. So keep an eye on the sterling, and that has a lot of implications on other pairs that you might be looking at. So anyway, that's just some food for thought, guys. And remember, if you are and you want to be part of the Forex Analytics family and want to listen to the other private webinars we have for our community, it's only $1 for 10 days to try it out. The light version, which gets you all the other webinars, is only $19 a month, and that even gives you the mobile app and all the basic analysis. So, and then you got to visit our sponsor too, Pepperstone Securities. Open an account with them. Then you can get premium Forex Analytics for free for up to 4 months, but you have to open your account through here. That link. All right. So Stelios, good morning. How are you?
I'm very well. Good morning. Hello, everybody.
Good morning, Stel.
Happy turnaround Tuesday.
Got some movement overnight.
Well, I've been looking at that, and really we had a little bit of a pullback in risk, but we've seen this how many times now? I'm looking at the daily chart in the S&P, and it's just a straight line going up. Obviously, there are a few dips here and there. For me, unfortunately, because I really want to have a proper correction, unfortunately, nothing's changed in like the bigger picture. Obviously, intraday, a lot of things can happen, but we get a little bit of risk off. Commodity currencies are struggling. The Kiwi, especially, you got that one really, really well, I think. And dollar Norway, the one we're looking at, and I think you're long that one.
Yep.
What is it? 865 is the breakout or something like that?
Yeah, 860, 865. It looks like we're forming more of a triangle here.
Yes.
So 862, 863. I think that's going to be kind of important intraday, and daily closes up around 865 will be important.
Yeah, we do have Powell and Janet Yellen testifying today and tomorrow, so they might give us something, but I don't see something that's going to really shake things up. I mean, we have Yellen who just wants to push more for more and more and more. Now I was reading, her main argument is, rates is low, why not borrow a lot more? And it's a little bit crazy. It's like, like me, Stelios, I'm spending way more than I'm earning, but I can borrow my credit card for 1%. Yeah, let's borrow more and more. It doesn't make any sense, but that's how they think.
Well, you know what? Let's be honest about Janet Yellen. It's not her problem. She's only going to be here for another 30 years or so. When she's off the face of the earth, it's going to be everybody else's problem.
What do you mean? It's positive for her. She's rich. She became rich by doing what she does, right? And giving speeches after her tenure was over, like for, I don't know, 200,000. So as all rich people, trust me, she's not stupid. I mean, there is no chance she's stupid. She has diversified. I'm pretty sure she has plenty of assets that will, appreciate with inflation. So even if she's here for another 100 years, it will still not be her problem.
Khalid just he just said
Yeah.
Kaplan just spoke expecting Fed to raise rates in 2022. Now
Yeah.
it's interesting that Kaplan would say that. Now remember, it's a consensus amongst the Fed governors. It's it's his opinion, but I'm a firm believer that the Fed does send out its governors to send out messages to get their point across and to prepare the market for things. So even though that might be an opinion of Kaplan, that doesn't, his opinion does matter, because that you can kind of see where they are moving to and towards. Although
the Fed may wait till 2022, but the bond vigilantes aren't going to wait for the Fed. And you just saw their first performance here, taking 10-year yields from half a bip to 175, 180. You know what, guys, with yields softening up the last few days, you would have thought we'd get things really screaming, right? Because yields were the problem for things going up. But the dollar's rallying with softer yields. Metals are hanging on, but they're not exploding. And even the S&Ps had a great day yesterday, but it's a little soft today. So it's really interesting.
The thing, Dale, is that the reasons that made yields move higher have not receded despite yields pulling back. You know what I mean?
Yeah, I know the reasons haven't, but I mean, market behavior, you would have thought if they were headwinds, higher yields, that when they would cool off those headwinds, that everything would be able to spring back to life. And that hasn't happened.
Well, one of the things that we've seen with yields come down, and especially overnight price action, and one of the things that, I was talking about in the chat rooms last night in early Asia before I went off with my evening, kind of after I'd done the analysis, I got asked by one of the traders in the chat room, I can't remember who, had asked about, the dollar yen or the yen pairs. And I said, well, you got to watch yields, because if yields come down, that's when all the yen pairs are going to come down. And you can see that yields made a little bit of a move lower, and it really had an effect on, I mean, look at the Kiwi yen. I mean, the Kiwi yen just absolutely got destroyed. The Canadian yen, a lot of people in our community were short Canadian yen. Obviously, a lot of us are short Euro yen, myself included, and Stelios, which, by the way, Stelios has been a great call. Kiwi yen just getting destroyed here, but all of that is a function of yields coming down. And but to your point, Dale, talking about yields, one of the currencies I expected to be a little bit more pressured, which isn't, is the dollar Swiss. And as yields come down, I expected the dollar Swiss to come all the way back down towards 92. I have a bunch of orders to buy down here, and we didn't reach for it. We actually we made a higher low, and now we're heading higher towards the upper end of this flag pattern. So if yields start to rally again, this dollar Swiss is probably going a lot higher than it is right now. And just I want to address one more thing before our guest comes in. Khalid had also asked if Kaplan's a voter. Kaplan is not a voter right now.
Doesn't really matter,
to
be honest. Doesn't really matter, to be honest, Blake, because we very, very rarely see anyhow any descendants. You know what I mean?
No, because they're moving their dot plots now. So this is where
but I mean, at the end of the day, we've seen that they move in tandem. I mean,
Steve, I have to disagree, because this is the year, in my opinion, where things do matter. They haven't mattered for a few years. Really, economic data, Fed governor activity hasn't mattered for the last several years. This is the year where everybody's going to start paying more attention to what every Fed governor is doing, what economic data is what economic data is being released, and how it's trending. Because when you have every central bank at basically zero, this is where we move from. And so now everything becomes hypersensitive at these levels. And that's been my entire argument for this year, and that's why I think it does matter. You got to pay attention to what these Fed governors are doing, because they're going to be sending messages, and even an adjustment in the market's mentality for a quarter basis point move is going to make all the difference in the world when everybody is zero bound. You know what I mean? So I disagree with that. I do.
No, I agree with what you said. I just believe that all of them are spineless, so none of them will want to really break the market. That's what I mean.
That's not fair. That's not fair.
Tell us
Anyway,
what really
They've done a pretty good job navigating through. I mean, whether you agree with the policies they've done, look, I haven't seen total economic collapse yet, and I haven't seen the world implode yet. I'm not saying that we're not going to turn into Terminator world at some point, but
Mad Max,
scorch earth, Mad Max, that could happen. But as of right now, I think they've been handling.
There's a new series coming out, Blake, Mad Coach. And it shows me walking around.
But hey, guys,
anyway,
I got to say,
Harold is here.
Dale, I know you have your interview right now, but for more great conversations between Steve Kellings and I, we'll be back in 45 minutes for the Forex analytics community, and believe me, we will be having these conversations in about 45 minutes, right, Steve?
Absolutely.
All right,
guys, thank you very much. And Harold, I'm getting you set up as a panelist. Looks like you registered here twice, and I'm hoping I got the right one. Harold, welcome back. Asking you to unmute.
Yeah, I got it.
Got you, Mr. Malgrim.
Oh, great. Nice to hear from you, Dale.
Yeah, good to have you back, Harold. So you sent me a few things on Twitter. You don't normally show any charts or anything. We're just going to talk about what's on the radar. And from what you told me, so I'll share my screen. You want to talk about the reopening. Blake is up sharing his screen. So go ahead, Harold. Tell us what's on your radar right now.
Well, let's begin with the world is now busy discussing rebuilding supply chains. And there's a lot of chatter about supply chains are what's behind the inflation problem. And there's an assumption that we're going back to where we were. The pandemic will be gone and let's resume what we were doing because it was good. But what I believe is happening is during this period of the pandemic, a huge amount of technology has been spurred forward. And so let's begin with the supply chains.
Okay, Harold. I think we have an echo going here because
I've got two phones. Yeah, I'm sorry. I'll see if I can get that.
I think it's because you registered twice, but
hang on. I'll clear it. There,
maybe you have the volume on if you turn the volume off in the room.
No,
okay, better.
I think it's going. Yeah, it's going on.
All right, great job.
Okay.
See how technically savvy you are when the pressure's on.
I'm learning. I'm getting old, but still learning.
You're like me. Go ahead.
The supply chains were for years seeking just in time. Began with Toyota teaching everybody don't hold inventories, just make things for when they're needed at the moment they're needed. But we had the Fukushima tsunami and earthquake, which some years before the pandemic, which taught everybody, just in time may not be good, but we need is just in case. And so gradually the supply chains were diversified. We need a backup. But still, the focus, even U.S. debate about China is how do we reduce our supply chains with China. But everything has been changing. The wages in China have been rising, and China is not a low-cost place for doing anything with industry anymore. But what has been happening in the background is what I call a global industrial transformation. And the people at MIT talk about it as Industry 4.0. It's putting together all of us coming in new materials, new man-made materials, not materials from the earth. And
Okay.
artificial intelligence and integrated communications, everything. The only thing that's just in time is information. And what is happening? I can give you quick examples. In 3D printing, 5 years ago, that was plastic, and everybody sort of shrugged and said, "Yeah, I guess that's good for fixing a few parts." Maybe even for tractors on the farm.
Now they can do internal organs.
Yeah, now yes, they can make body parts.
Yeah.
But now, frankly, well, it's come to you can make a small scale nuclear reactor solely by 3D printing. Think of what I've just said. You
Wow.
can do anything that's fabrication of building something by 3D printing, and the materials used may include some powdered steel or powdered aluminum, powdered zinc, but basically it's new man-made materials, and these are not materials from the earth. In other words, we're coming to the point where the amount of stuff we dig out from the ground is going to start declining. And that means, think about it, it's a lot of things involved here. Earth moving equipment for that purpose is going to slow down. The shipping across oceans, Atlantic and Pacific, that's going to diminish because you don't need so much of this stuff. And the material strength, some people who don't know about this will say, yeah, but it's not as strong as steel. But what is now happening is ways of creating material that is stronger than steel, but doesn't require big furnaces and cooling to make it hardened. It just comes out of the machinery stronger.
Wow.
And less degradable by air and sea and the usual things that make our products age.
It's a whole new paradigm, Harold. I mean,
it is, and that's why people at MIT call it Industry 4.0. It's an industrial revolution. Now, what it means boiled down is what we make. What we conceive is needed. We can redesign and build things for purpose, and we don't need scale. We don't need big assembly lines. You can do this all in one place. Second, how we make it. We don't need the furnaces anymore for heating and annealing and sintering. All of that is done by laser on the spot. And then where is this going to be? Now, let me give you a little background when I say these big things. 60 years ago, I was trying to remember when it was, I was appointed a professor at Cornell. And I was, for whatever reason, they thought I was brilliant. So they appointed me a full professor for my first year. And I was supposed to teach econometrics and mathematical economics. But after a year, I got snagged to Washington, and I had a life first in government dealing with trade, which I had to deal with all of these CEOs complaining about imports from cheap labor in Japan and other places. And then I left government.
Then it was Japan, Now it's China. Not recently. It's been China. Then it was Japan.
Now it's China, but China is going to be passed also. I mean, I went through all that period when Japan is going to be number one, and then suddenly it's not. Now it's China will be number one. And I don't think China's growth will continue. I think it's going to be barely positive because they will hide the fact that they can produce a lot, but the demand isn't there.
All right, let me put your new paradigm that you're talking to an early test. All right, so there's all of a sudden a semiconductor shortage. So why aren't these 3D machines just pumping out semiconductors to fill the gap while we have this shortage?
Yeah, the semiconductor plant is hugely expensive to get the clean technology required, and the only company that really dominates all that is Taiwan.
Right.
Semi.
So can 3D printers make the same semiconductors that Taiwan Semiconductor does?
No, but they can do it without much labor.
Okay.
It's the exception to the rule, but it is, and Taiwan Semi is going to make them in the U.S. as well now. It doesn't too much matter where you make them because they're high value and you move them by air and they're worth a lot of money. It's like moving diamonds.
Right now it is, yeah. Okay.
Well, and DOD has a huge program to sponsor developing the same processes inside the U.S., but it's just so expensive. It involves trade-offs. Do you want more fighter aircraft or more ships, or do you want to make more semis?
Okay.
So your example is the exception, and it's going to hang over us for a while. But think of what I'm saying. What is made, how it's made, and where it's made. We are not going to see industry coming back to places like Detroit and Pittsburgh. That's dead. Yes, we'll see fabrication popping up where there's labor advantage. We'll see a lot of that in Mexico, just across the border from Texas. But less and less labor is involved in the fabrication. More and more labor will be needed for distribution, for servicing, but making stuff will be less and less people, less and less jobs. But it's the end, and now it happens to come at a time when the pandemic is providing opportunity for mobility. And you can see inside the U.S., a lot of people are moving from the northern states where the taxes are high and the services are low to Texas and Florida and other places. And if I had to name a technology hub that is replacing Silicon Valley, it is Austin, Texas.
Okay.
So now what Europe doesn't have is high people mobility. Families lived in a place for several hundred years and they're not moving. But here we have mobility, so it's a big advantage to the U.S. But think of the consequences: less shipping, less seaborne traffic, less air traffic, less digging of the earth. All of that has consequences for it.
Well, the consequence, Harold, that's popping into my head is, what people have been talking about for a long time about the displacement of workers in the new economy with robotics and AI. And now you're talking about supply chains and being able to manufacture things with 3D printers. You said we're going to need more people for distribution, but I don't think it's going to make up for job losses on the manufacturing side. Am I correct that there's going to be a lot of people that are going to have to retrain or just not or drop out of the labor force?
No, you and I are on the same wavelength here. I mean, all this phony baloney story that we're all going to, get back the jobs we lost. Some 20 million jobs that somehow it's all going to miraculously come back. Those jobs are not coming back. New jobs will emerge, but it means retraining. It means a different system for educating job entrance. We're going to have to rethink our community colleges, the certification process for skills, the role of universities, all of that, and all those universities with brick and mortar. I think some of them are not going to make it. We're going to see a lot of wonderful university buildings vacant because they're not built for this transformation I'm talking about.
Please, Harold, don't tell me it's going to affect college football.
Yeah, well, some of the buildings go and the money goes. I mean, all you got left is, I mean, the college football may turn into be a separate business.
Okay. All right. So we go from this global system to you sent me some notes that everything becomes regional, and that's across the globe, not just in the US, but different regions are going to benefit. And like you're talking about the Rust Belt getting hit again for I don't know how many times the Rust Belt has tried to reinvent itself, the Northeast and so forth. It's going to, probably could just wait and buy housing cheaper and where people are fleeing instead of trying to buy real estate in Texas where everyone's going. And you're right about Texas. I was actually considering moving down to an island down there in Texas, and they said the market is so hot. I mean, Elon Musk has his SpaceX down there, and everything's leased up, everything's being bought, and the guy told me I've never seen more Californians or New Yorkers come here and buy up and lease up everything in Texas.
It's absolutely. And if you step back, just an observation, my oldest daughter Pippa, who's on a lot of the social media, she's working with the frontiers of venture capital now in Europe and some other areas. She knows all the Silicon Valley people, but she said the big money, it's still flowing through some of the traditional channels, but basically a place like Liechtenstein is now becoming the number one new venture capital source. And money flows from the world to Liechtenstein and then out from Liechtenstein. And just keep that in mind when you're thinking about the Swissy and the currency markets. A big shift is occurring, and it's not in thousands or millions; it's in trillions. And a lot of that is interesting.
Why Liechtenstein?
Taxes.
Okay,
it's a safe haven. It's one of the last safe havens, but it's in an unassailable safe haven because European wealth will never let it fail.
Okay. All right.
Now, there are some others like the British Commonwealth havens that they are going to get stronger, and that's to be kept in mind too. But it's just
so then Brexit was a good idea in your view.
Absolutely, I think the British themselves didn't realize that London would become even the city of London financial center would become even stronger. And now I think we'll see that the entire Commonwealth is going to benefit because the Bank of England over the last 3 or 4 years has been working steadfastly with all of the Commonwealth countries, but also the odds and ends, Bermuda, individual places in the Commonwealth on digitalization of central bank transactions. You're going to see a new configuration, and the only other entrant to that group will be Japan. Let me step aside for a moment and tell you about Japan, because some of your audience, most of your audience, really wants to know what's happening right now. And I dealt with Japan. I first visit to Japan, Lyndon Johnson personally called my office, said, "Come to see me." I was sent on his behalf to Japan in December 1964 for a secret meeting with the Prime Minister, and then come back and tell Johnson something that I was to tell nobody else. So it sticks to my mind. I've been dealing with Japan ever since. And the one thing that you have to remember about Japan is that a lot of the money in Japan is run by Mr. and Mrs. Watanabe. You remember in the 80s, everybody in the finance ministry wanted to know what the housewives were doing because they were all the managers of household. Well, that's
they were the ones trading FX while their husbands were at
right.
the office, right?
Yeah, they even got into the beginnings of derivatives. You know, it was amazing. But let's not overlook that influence. But second, in March every year, it's the end of the Japanese fiscal year, so there's always a lot of movement of capital for businesses either establishing the money that they made over their fiscal year and stays outside or comes in. Depends on the shape of the company. So if somebody comes and tells me what's happened in the last 3 weeks of March, I say it doesn't matter because this is all internal bookkeeping.
So it's a repatriation time, and does that lead to a stronger yen temporarily for the flows?
This year, it's barely had an influence on the needle. But let me tell you one new thing that everybody should be aware of that is not in the news, but I happen to know a lot about Japan still, and I have a lot of interaction at the highest level of Japanese finance. Chinese families are pouring a lot of money into Japan, not in commercial office building. They're buying homes, second homes, in places like Okinawa. They're calling that China's Florida. And what also is going on is Chinese families diversifying are buying a lot of Japanese treasuries because they see volatility in the dollar, but they are buying Japanese treasuries not because they love Japan's Bank of Japan policy, but because it's a proxy for the dollar. It does, it's for the Chinese, and the role of the yen as a proxy for the dollar has become really big. And
that's interesting.
A lot of people in the foreign exchange market have simply failed to see that.
So we'll see if that translates into stronger yen. The yen usually gets stronger during periods of uncertainty. It's kind of a safe haven, and recently it's been weakening. As it's kind of a good correlated currency to interest rates.
Well, one thing to watch is that if the dollar begins to move in a more serious upward direction, there might be a lot of selling of Japanese treasuries and buying into dollar assets.
Okay, why are the Chinese buying homes in Japan? Could it be they're worried about China?
Yeah. Yes.
Okay.
Boiled down exactly. People who have everything in China is managed by families. Sons, daughters, nephews, nieces. It's everything's managed that way, and having a second place you can fly to nearby, and that is not under Chinese law, and it's just
it's a haven for them. It's a geographic haven for them. Since you brought up China. Since you brought up China, we have about 6 minutes left. I want to ask you about, and you're talking about they're buying Japanese treasuries, and China and Russia, are very much in favor of de-dollarization. I want to ask you if you're surprised by our new president, Joe Biden's approach to both China and Russia. People don't understand, Harold, and maybe you could back me up, that there are hawks and doves in both parties. Just because you're a Democrat doesn't mean that you're not a hawk, right? And
Yeah,
if there was one
absolutely
thing,
right. Yeah.
and
Yeah.
if there was one thing that both the Democrats and the Republicans sang in harmony, was their anti-China rhetoric. So,
Yeah.
what do you think about how President Biden is starting off with his foreign relations initial salvo with China and then Russia?
Well, um, he's avoided a contact with Putin so far, and I think that was wise. But his Secretary of State and Jake Sullivan, the NSC director, opened a dialogue with China, and I thought that was really foolish. So what all they got was, invective flying and propaganda flying between them because they didn't prepare for a meeting with China. So if you ask me, what is the China policy? I don't think they have a clue yet. Now, I've been involved in every presidential change, that is the transition, either formally or on committees or asked for assistance ever since early 1960. And it takes about 9 months to a year to figure out who's in charge of what part of the world. Is it the NSC? Is the Secretary of State or Secretary of the Treasury, because that's a money issue? And it's a rivalry. Until then, it's kind of a gang fight. And so I'm not surprised. It's incoherent, confused, and we don't know what Biden wants because I don't think he has a clue. It's just the way it is. And I think you're absolutely right. There are China hawks in both parties. It's become popular for many reasons. National security is one. Another is the loss of jobs and the old story of everything ran to China. We got, outsourcing. Right. Well, outsourcing is over. That's not happening anymore.
Yeah. Okay.
Now, what has been happening is two things. One is there has been quietly insourcing into the U.S., but nobody pays attention. But in the mid 70s, the CEO of, I was out of government, the CEO of Toyota asked me to spend time with them and think through how do they deal with the protectionism in the U.S. and Europe. And I guided them to just move the damn production. I mean, what is so frightening? Produce more in the U.S., produce more in Europe, produce more in Latin America, and they did that, and they became a global behemoth. And they were so successful in the south of the U.S., but everybody's forgotten how many Toyotas are made in the U.S. now. If you're going to a U.S.-made, an American-made car, the highest U.S. content will be a Toyota. GM Ford can't match the U.S. content of the Toyotas. It's weird, but the Germans have been watching this, and for the last several years, slowly dipping their toes into Alabama. And today, Mercedes-Benz, of all the SUVs they make worldwide, the majority of them are made in Alabama, and of the ones made in Alabama, more than half go to Asia and Latin America for export. It's become a major export platform for Mercedes-Benz.
Okay. Yeah. Okay. I'd like to wrap it. I'd like to wrap it with this, Harold. With what you said about administrations needing 9 months or a year to kind of get their sea legs. The markets are worried about new tax policies that may be brought forward by the Democrats and the Biden administration. So if that's correct, the market probably does may be worried about it, but perhaps nothing gets passed, at least in 2021. Is that the way you see it?
Yes, I have experience. I worked for the Senate Finance Committee twice over the years. I know all about how tax legislation is written. I remind you that Trump came in 2017 with control of the House and Senate. It took an entire year for him to get one bill through. He
Okay.
couldn't do it, even though he had control. Biden doesn't have control. He has a 50-50 split. I don't think he'll get any tax changes through. If he does, it'll be something very marginal. So forget dramatic changes in taxes. They ain't going to happen.
Wow, that's the headline here. And you know what, Harold? What another great conversation with you. You've done so many things. We could save a lot of time by just trying to figure out something you haven't done. Instead of the list is so long of everything you've done. It's really eye-opening and edifying to have you join us every few months, and really appreciate it. Thank you so much, Harold, for being with us. And your favorite Tracy Shy Girl will be with us Thursday if you want to tune
Yeah, I'm
in.
eager to look forward to
Yeah.
that. She's really sharp. She
Yeah.
is definitely the world leader in
Yeah.
commodity analysis.
Yeah, and you are definitely part of the greatest generation as far as I'm concerned, Harold. I really appreciate you being with us and sharing all the wisdom and experiences that you've had in your journey. Thank you, my friend.
Well, thanks for asking me. Getting
Okay.
older, I'm trying to pass on what I've learned.
All right, well, I'm going to give you as many opportunities as you want. I'll be in touch with you on Twitter. So everyone, that's a wrap. Thank Harold Meldrum for being with us today. Hope you guys learned things. I did. And don't just count your pips or your 3D printers, what they could make. Count your blessings, and we'll see everyone tomorrow. Adios.
Bye.
Thanks again, Harold.
Yeah, bye. Thank you.